Welcome to TradeTheMBI.com. This is John. This report is for the 6th of February, and while so many people are all excited and worked up over what's taken place, it's sort of kind of a ho-hum for me because this was all something we expected to happen. So it's kind of anticlimactic, but yet exciting to see it all take place. So we recognize the short. Well, it's clearly shown on the paint bar exactly what the expectation was. Now, I talked about in the video report these positive extremes, and I put a little line right here, but let me move it one over just for the benefit of being able to see the positive extremes. And this is the whole point of them, because what it does is it represents the start of the algo activity and usually becomes the reference points for returns. And sure enough, that happened midday, and then what we ended up started to get the follow through below it, which means that you've triggered enough people that they start selling. And this is exactly what the algos design themselves to do. They get the momentum started, and then you have to wait for that momentum to ease off. Well, once this one broke, we had our secondary positive extreme back over here. If I slide that one over, you can see we were blue there, and then boom, went to that. So that left us to the 2600 mark. Well, once you hit it, again, you get another set of selling, and that also whipped it. Now you can see what a dramatic move has happened overnight just in futures as things have evened back up. But again, none of this is really that shocking. It really fits within what we've been pointing out. We had this peak move, and then we started to get our warning signs. And then that last crossover point, which really took place right about here, and then followed through the next day with the cyan moving above green and a break of the ABM yellow, which we were expecting because we had gotten well past the mean reversion on it. And, you know, everyone will talk to you about the, angle of ascent, all this stuff. It was parabolic. There was no question about that. It wasn't going to last. The key was recognizing when it was about to fail, and we started talking about this with our lower shakeout readings. But they were still too high until we started to dip below that plus 15, which actually took place. So there was plenty of time to get involved with this trade. And this is why I even posted the short as we were taking it in size on our Skype chat. And we had clear, defined target goals, and it was just a matter of letting the market fill them in. You can see that we're still below the negative 60, so even these kinds of pops tend to be short covering, rebalancing back and forth. And here from the NQ standpoint, you can see the positive extreme right here is the one that started. And I would expect that you can see that the S&P is a little bit stronger based on this concept. Because the S&P is over the initial start of the positive extremes, whereas the NQ is not quite there. So it's taken a little bit harder hit, but exactly the same thing. This is now the buy-sell D versus the paint bar a little bit later because it actually waits for confirmation on that DOC spread, but still plenty of time because it turned red right above the ABM yellow up here at 69.29, and here we are down to 64.70. So this was, in my view, a pretty straightforward trade. Euro had faded back a little bit, but I would expect that it's going to continue its strength still. A little bit of weakness as the cyan came above the green at this particular point. So that was like the warning call on it. Still has a little bit to go before it going to generate any kind of significant fade. Flight to quality, so everyone runs back to treasuries. And this kind of a move, people will all start talking about will the Fed have to ease again, blah, 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 blah. That's something that the traders would like, but this was just a move that was well outside. We had gone an extended period without any type of correction, and we could see the difference taking place in the algos as we started to get a significant amount of change in, I want to say, involvement. I think this is the Fed attempting to see what it looks like when they pull back from their active engagement in the market. Let's just call it that. We'll be really nice about it. Oil, coming back to the green, I mean, we can see again, same thing. Higher highs, lower shakeout readings. Yes, we were still underneath the red DOC here, which indicates that we're going to stay long, but there's plenty of positive extremes also for oil to take place. And, the difficulty is that you have to reach this balance between where the economy is rolling and moving on its own versus being artificially stimulated. And like I mentioned the other day, it was just announced at the end of the last week, and most people didn't pay attention to it, this $1 trillion that the government wants to borrow, and the Fed isn't going to be a buyer of it. That's going to be a traumatic pull from, the overall, market capabilities. Who's going to be buying that debt? The Chinese have already indicated they're not going to. So I think that there's, for people in the know, and this is the other thing, everyone believes that price is dictated by a mass collective. But in reality, I've said to this for, going on a decade now, that there is a small group that has a larger amount of control. When they get things moving in a direction, you get momentum to it, and that's all that they're designed to do. This is all the whole point of what I've been talking about from an algorithm standpoint, that it's not the general mass that moves the market, because oftentimes the general mass buys and holds on to something for a period of time. It's very high-end active traders that it's a very small group that really dictate how these things maneuver. So gold holding up well, and that is also going to be a flight to safety as well. You're going to get now a situation where you have margin calls, and that's going to lead to even more irregularity here probably through today and tomorrow. So here we go with the, I'd have to shrink this back way back to get a real good glimpse of it. So I was pointing this out the other day in the trade. Look at this, I have to shrink this, it just shows you how much volume there was. And all these short references that I was talking about with DOC spreads, where you will get a buy setup come through, but you get the cross of the steel going below cyan. And that is usually the precursor when you've already got green under red. Those become the secondary short signals going through here. But what I was talking about, this is sometimes you get a warning signal that isn't quite ready for it. And that's usually, in this particular case, when you've started a rally and things begin to move, you don't want to be shorting into positive shakeout with the rising brown going here, because it's an indication of strength of trend. And while it flattened out on the softening the shakeout, there was a second run to it. It was that second DOC where you had the brown had become flat at that particular point, and then we started to drop. And we still never had any reset of the steel. I mean, this is a 5K, and look at that. That steel has not reset. It came very close right here, which was the biggest momentum move we had going into it, but gave a great opportunity for an additional short. And what was that value over here? Let's look at the close number on that. Was it at the 2686, and you can see that dropped down to the 2529 level all the way down here from before. So let's zoom this back in so we can get a little bit more clarity in it. And then you can see, I mean, the shakeout has remained super negative with no reset. Now you've had these little buy signals that pop in there, and they do give a decent run. I mean, there's no question about it. I mean, when you're looking at something that's 2612 and you're rising all the way up to 27, this is a reasonable move, and you can still take advantage of those intraplays. But the broader trend was straight downhill. And then we started basing out, and we ended up with a fairly decent one, because remember, when it rises above the 13.5, it's as if it's coming back from underneath, and then you look for it to fade when it crosses right back over here. And that particular point, it just stays off right around the 50%, and you ended up with your positive shakeout. And then we started another momentum run right here, which has led to these highs. So pretty close to staying intact. This was a little bit of good support and strength, because this could have gone easily to the negative side right in here, but then we ended up with the cyan moving right back below the red, which is always a long, and that was right at the 50%, which is key. See, this is what I look for, and I talk about this is why the fib level retrace that we use, which is not based on a standard version of it where you're trying to find the high to the low kind of concept, but it represented a key point where you were getting an indication that you had strength at a key support, and then boom, took off. And so here we are back at the highs of this, which is still significantly lower. We were just zero on futures a second ago. We dipped back down to the 50s, and this has all happened in the last couple of minutes while I've been talking. It's been skyrocketing. We're now plus 19. I mean, it was -6 just before I clicked it on. So that shows you how much movement we're getting. This is that volatility move on the VIX. I was shocked when people were talking about being short volatility, and I kept warning you, even at the beginning of the year, that we were going to see a massive spike in it, and particularly became adamant about it as we approached the end of the month, and said, be ready for it. And sometimes maybe I'm just a little too lackadaisical because it seems so obvious, but clearly it's just caught a lot of people off guard, which, okay. It's their own fault for not having the right indicators. Not like they aren't available. We can clearly see them. I mean, identifying the right moves at the right moment for quite some time now. So, pretty straightforward stuff. As always, though, I will continue to posted a lot of good charts, particularly detailing these concepts, because it's become very clear in this rotation to a more free market flow. I think it's kind of exciting because we've been kind of stuck in a, I don't want to say quasi-government controlled model, which is really what it's been, with the Fed being actively participating. And we just saw that break away from, the government being the primary focus of running things since the collapse. And so this is kind of a breakout moment, so to speak, and it's not coincidental that it coincides with the new Fed chairman. There's a lot of I think a lot more political activity is a result of what we're seeing. It's not a coincidence that Trump has been touting the market move, and then this whole memo issue gets going, and you end up with the market down 666, and there's a lot of little underplay going on there, but it doesn't affect what we're able to do. We can see what our readings are and play accordingly. The pink bars tell the story pretty clearly. So there you have it. That's the long and the short of it. You can see the S&P well above the algo line there, and I think we were just about getting there. I should put a line here on the NQ for you as well so you can see it. And when I do that, if you have snap mode connected, it will go automatically to the high, low, or open, whichever one you click. So you can still see the NASDAQ behind, and this gives you a relative reference of market. So I would expect the NASDAQ to move more on a continuation move, simply because it's behind. So because of that mean reversion. So this gives you a little bit of an idea on how to play that configuration. I've run very long. As always, though, trade well, and we'll talk again later on Skype chat.